Would I sit down with somebody at a kitchen table and discuss their motivations and why they want to move and where they want to move and that they want to move? How often they don't really talk to a CPA, or they don't understand the $500,000 exemption or the $250,000 exemption.
When you're helping someone exit, what have you found to be the biggest frustration, especially for high-end primary homes that doesn't qualify for a 1031? What's been the biggest frustration when you've seen for your clients when it comes to selling highly appreciated homes, especially luxury homes, and maybe not even having the 1031 option or having a good solution to sell and defer the tax?
I'm always shocked. That's a great question, but I'm always shocked when I sit down with somebody at a kitchen table and discuss their motivations and why they want to move and where they want to move and that they want to move. How often they don't really talk to a CPA, or they don't understand the $500,000 exemption or the $250,000 exemption, and the different options that actually entails. If you're in the military, you can get a different kind of a benefit, but oftentimes 500,000 does not cut it, and you've got the Obama tax after that. And oftentimes it really is it's a conversation they need to have with their CPA. And here it is, 2022. I kind of feel like everybody should know about that $500,000 exemption. I would say less than half of my clients have a working understanding of it. And so that's oftentimes I ask them to talk to the CPA, because I don't want to be in a transaction where they go, oh my gosh, you never told me about this, and really we're better off staying, or we're better off renting the place out, because you could rent the place out for another 3 years, as you know. It's as long as you're primary residence for 2 of the last 5 years, not the last 2 years. It's 2 of the last 5 years. And oftentimes that is going to be a better fit for them to hold on, maybe be a landlord, or maybe convert it into a commercial property.
Yep, very well said. And yeah, it's the 121 exclusion. If anyone's curious about what Michael's talking about there, and if you lived there 2 last 5 years for your primary, the government gives a $250 basically addition to your basis if you're single, or $500 if you're married. So let's say you bought a house for $1 million, it's worth $1.5 million. You lived there 2 last 5 years, and you sold it at $1.5 million. You have no capital gains tax. It's one of the best strategies to use to build some wealth that's tax-free. In fact, my wife and I did it for our first house. We bought it for $135,000 at foreclosure. We sold it for 2 years later for $250, and it was great. And but if you do get beyond that, we do have another solution called a Deferred Sales Trust for anyone who's wondering, and it works for primary homes. In fact, we just did an $8 million deal in Palo Alto off of University Avenue, and he had bought it, and his basis was about $6 million. He had 5 kids. They're all gone. He's single now, and he's looking at a substantial about $2.3 million gain above and beyond his base, his 121 exclusion. And he's able to defer about $800,000 of tax. And so if you want to learn more about that, you can go to capitalgainstaxsolutions.com. It also works for cryptocurrency businesses. It can save a failing 1031 exchange. That's capitalgainstaxsolutions.com.